Alright, what's good with y'all boys? We're back again with another video, and in this video we're going over how to trade all-time highs. Now, specifically at the time of this recording, we just hit all-time highs. It is currently April 17, 2026. We are just now hitting all-time highs, so I felt like it was a perfect time to make this video. And so one of the biggest misconceptions about trading all-time highs is a lot of people get in the mindset, oh, we are too late to buy in because we missed the entire move. It can be a little bit frightening when you see price run all the way to all-time highs and you think that since we're overextended, then we can no longer buy and we basically missed out on the whole move. It's actually not the case, and we can still catch buys, and if anything, we should be buying when we're at all-time highs just because we're following the overall higher time frame trend. And so the thing that holds a lot of traders back at all-time highs is simply just a mindset thing, and if you do not get over this, then you are going to be held back in your journey. So today I'm going to show you precisely how to trade at all-time highs. And these are the top 3 things that you should be avoiding when we are at all-time highs. And number 1 is just shorting because we're too high. So right here, you can obviously see that price damn near looks pretty overextended right here. But if I was just short right here with no confirmation at all, just because we hit all-time highs and I want to short going back down, ideally it wouldn't make sense because there's no confirmation or structure showing us that we're moving back to the downside. So shorting at the top of candles is going to get you fried. I know a lot of people like to top tick, but at all-time highs, it's a very, very risky move trying to top tick all-time highs because, again, you never know when intuitions are going to pull price back down. And so what you'll notice when we're pushing all-time highs is 2 things typically happen. We usually have the continuation and we have the manipulation followed by continuation. So the key to this is by longing in the internal liquidity. When we are specifically at all-time highs, we want to see price rejecting out of higher time frame PD arrays. If you use anything on the lower time frame, then what you'll notice is that it's not as valid or as respected or disrespected. It's not as prominent of a PD array to use compared to the higher time frame, especially when the higher time frame is this bullish. We only want to use high time frame PD arrays as our confluences to know that price wants to continue going higher. And so the highest probability entry model when we were actually at all-time highs will be this diagram that I drew out right here. So you want to see price displace higher and make this all-time high. We want to get a pullback, and ideally we want to get a pullback into some type of PD array. And then once we get that, we get our confirmation candle, a manipulation candle, and then we can enter once we break that back to the upside. We want to see us tap into that PD array and either create sell side liquidity or SMT. If it's A+, then we'll typically have both, and I'll show an example of this later. But we'll typically have sell side and SMT down here. Once we manipulate both of those and reject out of there, we can enter off of a 1 minute, obviously go break even at internal liquidity and target only to all-time highs. Nothing past this drawn liquidity. Nothing past the drawn liquidity. And we are at all-time highs. It is very, very easy to trade. Literally, you should only be thinking longs. If you have this mindset when we're trading all-time highs, then your win rate will be very, very high, and you can capitalize on these moments in the market. So I wanted to show my trade from today. Hold on. So this is an example of the trade that I literally took today and journaled it and called it on live. So again, same thing that I said before. You want to see us push, make a drawn liquidity higher. This time we had all-time highs resting above us as external liquidity as well. So you could target internal and external liquidity. We get our pullback into a 15-minute fair value gap, rejection out of it, pull back again. We manipulate these lows and create an SMT with ES, as ES took out this low and NQ didn't, and then we flip with bearish momentum. Got a nice 1 minute inversion for entry, and then you could go break even at whatever point makes sense for you within this trade. I only took this trade as a 1 to 3, I believe, into like this high right here, but you could have easily have held this same position all the way to all-time highs and basically almost bottom took this entire move back up to the upside. So you can see that it's very, very easy to trade all-time highs. Shorts are very, very unpredictable because once we push all-time highs, you generally do not know when the market is going to balance back out, or if we're going to have one of those days where we expand 500 points to the upside. So again, key of the moral of the video is long. Longs are your friend, trend is your friend until proven wrong. Long until you're wrong. Long until you're wrong. Just remember that. So again, you can enter with the ICT model like I'm teaching you in this video, whatever model makes sense for you, but just understanding higher time frame narrative and continuing from there. Now, one thing I'll leave you guys with is to know when we are actually flipping back into bearish structure. That is also another key indicator that you guys will want to know. All right, so let's look at another example when we went to all-time highs so we can see when to know when we can actually take shorts, right? So at the time of recording right here, this is all-time highs, and you can see how we fly past all-time highs for basically a few days almostly. We fly past all-time highs, right? So now knowing that we have to use our higher time frame PD arrays in this situation, right? We can see clearly that this 4-hour fair value gap right here gets inversed. And right when this 4-hour fair value gap gets inversed, that is one of our key signals that structure is changing and we're going back to the downside. So again, right here would have been an ideal time to short, because now once we get that close on the higher time frame, we can then short into a PD array like an untapped 4-hour, which would be this one right here. Unfilled 4-hour, went for a nice 1-to-1 with stops above the current swing high, and drawn liquidity as the unfilled 4-hour, unmitigated 4-hour right here. So this would be a good time to short, again, when we are at all-time highs, but again, it is not very ideal. As you can see, we don't go much lower. We tap into this unfilled 4-hour and we reject right back up, do the same thing again, and then we get a flush off of one singular day to wipe out all of that shit. So again, shorting isn't bad, but again, you should only be following the trend. Wait for a PD array on the higher time frame to get inverse or disrespected, and then it would make sense to start looking for shorts. So if you guys actually want to learn how to trade like this and learn step by step with me, not just like concepts, but like real executions, real models, real breakdowns, that's exactly what I teach inside of my coaching program. I go live with my students, break down trades in real time, and I'll show you what I'm looking at in the market. So if you're tired of guessing and you want a clear system to follow, click the link in the description or DM me mentorship and I'll get you started. And I thank you guys for watching to the end of this video. Make sure you guys join up the free Discord in my bio as well. As again, thank God for another day, and we move on to a new one. See y'all, boys.